Good afternoon, and I wish a very warm welcome to all those on the Facebook watching us live to this episode number 4 of the Real Estate Scoop with Soma. I need to just advise all of you that the last 2 episodes was cancelled because of some unforeseen circumstances, and so we are continuing back. So that's why we're having it today. And then the last Friday of next month, we're going to have one more, followed by 1 week earlier, in December. We have another one. I'll give you the details later. So once again, welcome. A special invite to the ARENA members. ARENA is ASEAN Real Estate Network Alliance, who we have invited to participate because we're going to cover a little bit on the economy of the ASEAN countries. And so we have extended this invitation. So from 9 countries, there are the members of the other real estate associations who are joining us for this chat this afternoon. Okay, I've got a quote and I wanted to share this with you. Government is not a generator of economic growth, working people are. Today, since the subject matter is about the economy, you must understand that each one of us are a part and parcel of what is happening in the economy, and as such, we don't always expect the government to make all the decisions. What we do on a daily life, what real estate people do on a daily basis affects the economy, okay? As I said earlier, this is the 4th episode. This live talk is committed to helping real estate practitioners, especially real estate practitioners, to provide the latest update on what's happening in the real estate market. At the same time, to update practitioners on valuable insights on real estate by guests who will share their thoughts and their experiences. And every month we think about who should be a speaker. So if you've got any suggestions as to who we should invite, please suggest to us. Afterwards, there's a comment section where you can go and scan and comment. Okay, the last show on the Dutra Enclave was postponed, and this will be held, as I said, on the 27th of December. And also on the 20th, we have a special edition for rents on goal setting for the new year. So I would guess all the new rents should be coming for this, especially also the older ones, the team leaders, because this will give you an opportunity to learn how to goal set for the year 2025, okay? So, okay, let me straight away go to allowing to update on the goings on in the market. Again, that's very important. So number 1, the board has decided that all NCC students, as announced at the last session, that you must undertake online NCC assessment at the end of the session. And so this has been going on well, test run now. So effectively from 1st of January, I think the questions will be a little bit more difficult. And so my experience has been that now everybody's paying attention. Everybody is now making sure that they take the notes and all that so that they can pass the test. And they're doing quite well at this point of time. RRP courses, again, take note. For negotiators, the courses will end 31st of December, and renewal of the rent tax will commence then. So if you already attended RRP, you can start applying for your new rent tax now until 31st, until the end of March 2025. So that is going to help you. There are already circulars that has come out. So if you do not know about this, please refer back to the board's website, where they have announced the all these matters under the circulars, or you can ask your principals about what are the new circulars out, because circulars affect us. All right. The other one is scams abound. I think the last couple of, I think 2-3 weeks, so many scams. I think $1 million lost by Chinese students, and then there's 15,000 ringgit lost, and so much of money is being lost. And this is only the reported cases. There are probably hundreds of cases that's not reported, and it's really a serious issue. Of course, we can't do anything about this. The public must be aware that they need to deal with those who got the rent tag. And it's also a reminder that the rent tag plays a very important role so that the public at large can trust us, put the money down to the client's account, so on and so forth. So as a REN, take note that it's an important information that you should share with clients and educate them that they should not deal with anyone who do not have the rent tag. Okay, so that's very important. Probably I'm also looking at the associations, real estate associations. There are a number of them, not actually making any statements in the press, serious statements as to what needs to be done. I think the board has come out with this notice that telling the people, oh, you be very careful, but I think it will not be effective because only a notice to us, it is not going to the public at large. So I think we should go and educate the public on this matter. Okay, so refer to that. And then there's a circular 24 of 2024, which is on the copyright of probation estate agents' work diary. This is quite surprising to us because the work of a PA, they keep the record on a daily basis for 2 years and they submit that to the board. And now the board is saying that the copyright of that work belongs to the board. So we had a couple of people talking to us. Is this right? Is this fair? So I don't have a legal reference to this, but I'm just bringing this to the awareness of PAs. Please take note that the work that you do, the copyright belongs to the Board of Valuers, Appraisers, and Estate Agents Malaysia, including, of course, property managers. A reminder again, NAR convention. I mentioned at the last episode that there was a convention in Boston, USA from November 8th to 10th. Next year it's in Houston. I personally am taking this initiative to share with all the real estate people that we should attend this. Houston is the NASA Space Center, very nice place to go, and Kashif's home state. So I spoke to him the other day. He said he will be there. Probably we'll go to his house for makan. So plan now because it's going to be in November, and start saving money. I think it'll cost you at least 15 to 20,000 ringgit if you want to travel there and enjoy yourself. Okay, fantastic learning experience. Once you go there, your mind opens up and you'll never be the same person again doing real estate. Okay, so now let's come back to the most important part of today. I have great pleasure now to call upon the speaker to come forward. Can I call upon economist, yeah, Shan Said. Welcome. Okay, before I introduce him, why is it that this topic came about? So we thought that 2025 is going to be an important year in our life. And so if we have an understanding of what's happening in the economy, I think it's going to help us to be a better estate agent or better negotiator. And so a good understanding will help us to represent our work to the public at large. And so we thought it's important, and that's why we have imported Mr. Shan. He's got fantastic experience. I'm going to ask him a lot of things about him later, but just to quickly sum up, Shan Said is the chief economist of GUI IQI, a PropTech company, leading PropTech company. He has 22 years of solid financial experience in the areas of private banking, risk, compliance management, commodity investment, global economy and business strategy. He's based in Kuala Lumpur now, but he's not a Malaysian. He's a financial market commentator and cited in, I think, major TV and news media, including Al Jazeera, TV Channel News Asia, Singapore, International New York Times, Malaysian Reserve, Edge Financial, Wall Street Journal. He has been invited at World Bank IMF annual meeting. in Washington, D.C. to participate in the Belt and Road Initiative Summit where I presented the paper. And most importantly, his understanding of economy comes from the fact that he graduated from one of the prestigious business schools in USA. Both Booth School of Business at the University of Chicago. He got his first MBA from IBA Pakistan in collaboration with Wharton School, University of Pennsylvania. He's also trained in alternative banking, strategy of Harvard Business School. I think now after explaining this, everybody will say, okay, whatever you say is God's word, inverted comma. So welcome again, Shan, to this episode. Can you probably tell us your journey uh, of your life?
Thank you, Soma, for having me in your show. It's an absolute privilege, and I'm highly honored. Soma, I started off from Pakistan. I studied, born in Pakistan, in Karachi, in the south. I studied in a Catholic school, got my first MBA from IBA Karachi, then started for a DFI backed by Asian Development Bank, then joined Standard Chartered Bank. Then I moved to US to do my second MBA from University of Chicago, and I'm working for IQI since 2013, and I have been with this company for the last 11 years. So I moved from Chicago to KL almost 13 years ago. So it has been a long journey.
Long journey. So, but how come you got excited about economy?
Uh, when I was growing up, I was very active in playing cricket and hockey and football, and I was the captain of my school hockey team. But when I entered into college, I thought I would become a fighter pilot because my mother wanted me to be a fighter pilot in Pakistan.
Ah,
But the life over there as a fighter pilot is very limited. You don't have a lot of freedom. And I personally like a lot of freedom and I like my independence. So I thought, going into business, and I followed my elder sisters because they studied economics in their bachelor's. So I followed my sisters, and that got me excited to study about economics and about statistics and about strategy. So that's how I got inspired through my sisters.
so that means are you still a Pakistani or are you
I'm still a Pakistani.
Pakistani? Okay, you're a citizen of Pakistan. Okay, good. Um, over the years, when I talk to you, whenever I talk about economy and how real estate is performing, I see the glitter in your eyes, and the fact that you are attached with IQI and focusing on economy matters related to real estate. I think there's a lot we can learn. One of the biggest challenges we have in real estate is our salespeople are not excited about economy. So they just want to sell and make the money. That's their basic macro level thinking. And when they go and see the client, they cannot actually talk about the economy at all. So can you just maybe to educate our rents and especially rents, why is the forecast of an economy important for real estate salespeople? Understanding of economy is important for real estate salespeople.
Yes, Soma, it's a very relevant question because when you go and speak to your clients, they want to know what is happening in the economy. So they want to understand at the macro level. So when you go and speak to your clients and you talk about GDP numbers, so what is GDP number in a layman's language? It's an income level, gross domestic product.
Okay.
Uh, Whatever you produce in a country, it has got certain value, and at the end of the year, it is valued. So when income levels are rising, when your GDP is rising, obviously people are making money. That's why your GDP is rising. So when you go and speak to your client and you say the GDP forecast for 2024, IQI said is between 4 and 5%. So it means the income level will be rising between 4 and 5%. So that gives confidence to investors who are looking at this real estate investment from a macro perspective. And GDP growth drives all sectors. It is not the real estate sector that drives GDP, it is the GDP, the bigger picture, the strategic picture, because economies run on totality. Economies run on aggregates, in submissions. So when you look at the economy from a macro perspective, and it gives you an idea what is happening, whether the income levels are rising or whether income levels are going down. So when income levels are rising, obviously all the industries are rising. It means that productivity is going up. So when productivity is going up, obviously the income levels are rising. That's why they say GDP numbers are very important. So when you look at the economy and you look at what is the pulse of the economy? When people often talk to me and say, how do you define, okay, these numbers are very important, GDP numbers, inflation, monetary policy, fiscal policy. So what is the pulse of the economy? The pulse of the economy, the street smart way of looking at the economy is you go to the restaurant business. A restaurant business gives you the idea what is happening in the economy. Because one industry, and there are 10 to 15 industries related to that restaurant business. You have manpower, you have supply chain, you have commodities, you have so many things. So when people are spending money in the economy, the restaurants are normally 70 to 80% full. That gives you the pulse of the economy. So right now, if I were to take you to KLCC or Pavilion or BSC or Wanutama, you will see people start lining up at 11:30, 11:45, and the restaurants are generally any given point of time are like 70 to 80% full.
And there's also a queue.
And there's also queue. You go to Little Penang Cafe at KLCC, just adjacent to Kinokuniya, and you will find people queuing up at 11:30. So this is a street smart way of looking at the economy. So when these are valued agents, as we call them warriors, they go and speak to those potential investors. They need to understand that GDP numbers are not very difficult. Income levels are rising. You can share with your investors that why Malaysia continues to stay relevant in the global economy because the income levels are rising. So when the global investors, they need to park funds, they only park funds where economies are growing, where there is macroeconomic stability, where consumption and investment patterns are strong. And most importantly, the government policy are consistent. The government policy are not ad hoc basis. So when government runs on consistent policy, only then you will be able to attract investment and only then you will be able to attract a higher GDP number.
So when you say that, when the income level rises, and generally when we go and talk to people, they said my salary has not increased for the last so many years. You talk about rising income, but generally we don't feel that income has risen, over the years. So what is the situation in Malaysia when you say rising income? Actually, income has increased in Malaysia.
Yes, 10 years ago, Malaysia's GDP size was 330 billion.
Billion. Okay.
And today, Malaysia's GDP size is almost 390 billion. So you just imagine, the GDP size has gone up from 330 billion to 390 billion. So income level has risen over the past 10 years. So when people say my salary has not gone up, it might be particular to one industry. But generally speaking, you look at manufacturing, you look at commodity prices are going up. Real estate prices are going up. So all the industries are growing. So generally, Malaysia has done well in the last 10 years. I have been living in Malaysia for the last 13 years. It has performed fairly well in terms of its ASEAN peers.
This year we are our GDP economic growth is around 5.7%.
5.1% on the average.
Yeah.
It is expected it will stay above 5% by this year.
This year. Okay. So why is it that we have done so well?
One factor.
Yeah.
That is macroeconomic stability. So when I talk about macroeconomic stability, I'm talking about political stability, economic stability, and financial stability. And for those global investors, for those sophisticated and smart global investors, macroeconomic stability is very important. They are looking at consumption patterns. Economies, they run on consumption. And people consume whatever the economy produces, people consume. That's how the economy is gauged. People are making investment. So when the local people are making investment, it gives confidence to foreigners to come into this country. So they say, how do you attract FDI?
Foreign direct investment.
Foreign direct investment. When you give confidence to your local investors, then foreign investors will come into the country. So local investors, they have confidence in the economy. That's why you see Malaysia attracts a lot of FDI during the last 10 to 15 years. And it's not just Malaysia. You have countries like Indonesia. They're also attracting FDI. Vietnam, Thailand, Philippines. So all these 4 or 5 countries in ASEAN, they're competing for investment because the local investors, they have confidence in the government policies. So when local entrepreneurs, local investors, they have confidence in government policies, only then you can attract FDI.
Okay, just for the based on what you just said, so what is the correlation between the economy and the performance of the property market itself?
It's a strong correlation. When GDP is rising, real estate market is rising. But you go to Europe right now, which country has got the GDP is rising and the real estate market is rising? None. Because the GDP is going down, Europe is in total shambles, and the real estate market is also going down. So GDP, whenever the income levels are rising, all the industries, not just real estate, all the industries are rising. So in Malaysia, you have the chip industry, ICT, integrated circuit technology. Now Malaysia has become very important because Malaysia is one of the contributors to China's chip industry. And the next 5 years, chip industry will become very, very important because everybody will be competing to get chips. Manufacturing, very important. Commodities. So if you look at the latest issue of Economist magazine, they're talking about countries where commodities, where they have got natural resources like oil and gas, precious metals, base metals, agriculture. Those countries will stay very relevant. And if you recall, in September 2022, Economist magazine, it talked about 3 regions: ASEAN, GCC, and Africa. They said these regions will be relevant for the global economy for the next 10 to 15 years. And if you see that latest issue of Economist magazine, World Ahead 2025, it talks about 9 out of 20 economies that will be booming are from Africa. So East Africa is the next Saudi Arabia because they have got rich resources in oil and gas. So Malaysia is very fortunate and Malaysia is blessed that you have got oil and gas. So countries where the demographics is strong, where consumption patterns are strong, where investment is coming in, where you have natural resources, those countries will stay very relevant and they will continue to have a strong and solid GDP growth.
Yeah. So based on what you just said, the economy is done, Malaysian economy has done well in 2025. We are already nearing the end. And many of you may be aware that the property market is also performing very well in the first half of the year. In fact, the first 9 months of the year, we have done very well based on what is the report that has come out. So you can confidently say, I can confidently say based on reports, we're looking at it over the years, that next year will be good. That's the layman's view. What is your view about the Malaysian, important subject, what is the view about the Malaysian economy in the year 2025?
Soma have already shared in press and media that for next year, we expect GDP will be growing between 5 and 6%, and ringgit will be trading between 3.50 and 3.95. A lot of people they are surprised when I say this, that Malaysian ringgit will be trading between
Repeat that again,
3.50 and 3.95 against USD.
Okay.
It is based on the premise that Fed will continue to cut interest rates next year. US dollar will stay weak. So once the US dollar goes down, all the other currencies will go higher. They will appreciate. So if you recall, 2 months ago, Malaysian ringgit was trading at 4.11.
Yeah.
And this year, we have already shared in Star newspaper that ringgit will be trading between 4.17 and 4.44.
Mm.
Right now, ringgit is trading at 4.44. And in May this year, many people thought ringgit will touch 5, and people were saying 5.25.
Yeah.
And they were questioning me, and a lot of my press and media friends, they asked me, Shan, do you think Malaysian ringgit will touch 5 or 5.25? I said, no, because I've already made a statement in press. So once I make a statement in press, I stick to that. If I am wrong, I'm very open in saying that, yes, I made the wrong call. If I make the right call, I give full credit to people in my networking that they have done a good job in
Okay.
giving me the right advice.
So that based on that, which are the sectors that's really going to contribute to the growth of the economy in 2025?
One is commodities. Commodities will stay very, very relevant. ICT, chip, manufacturing, real estate, and technology. So these are the some of the industries that will contribute significantly to the overall GDP growth.
Okay. So you expect the property market to perform better in 2025?
Absolutely,
I think
absolutely.
that's also the view of some very senior real estate people who said that they think that 2025 is going to be another boom year for real estate. So to all the real estate practitioners out there, take note of this. There's a saying, no, you must cut the hay when I can't recall that. What is that? It's really going to be a good economy, so you must take advantage of what is going to happen. All right. So don't lay back. Quickly start December so that you start early. Um, uh, by December, you should be able to have a good harvest.
Yes.
In real estate sales. Okay. Uh, is there any other things you want to add with regards to the Malaysia? What are the things you foresee may happen that can affect the economy?
There are few right now. One is inflation might come back globally. There are some factors that are beyond government's control, like the geopolitical risk, exogenous factors, global inflation, central banks, the global central banks. When I say top four global central banks, I'm talking about Fed, ECB, European Central Bank, Bank of Japan, and Bank of England. Uh, right now, Europe is cutting, ECB is cutting rates very aggressively. On the other hand, US economy is still very strong. So Fed has might give a pause after December. So they might have a 25 basis point cut in December, but moving forward, they will take a pause. But Fed will continue to cut interest rate because the president-elect Trump, he is not a big fan of higher interest rate because he is into real estate. And real estate people generally, they don't like higher interest rates. They don't want mortgage payments to be down. They don't want mortgage payments to be high. So I think the president-elect Trump will push Fed to cut interest rate aggressively, but as per the market expectation. The yields have come down of 10-year T-bills, but moving forward, I expect that T-bills will definitely indicate that Fed will cut interest rate, but they will do it in a very structured manner. So once US dollar stays weaker, all the other currencies, that's why I said I'm quite bullish on Malaysian ringgit. So all the other currencies like Indonesian rupiah, Philippine peso, Thai baht, Malaysian ringgit, Brazilian real, South African rand, all these currencies, they will appreciate against USD.
You think the Malaysian government will cut the interest rate further?
As per the market expectation, yes, it could be expected from Bank Nagara. They might have a 25 basis cut for next year.
So that's good news. That
Yes,
means your mortgage payment will be much less
will be lower
lower.
as compared to 2024.
Okay. So that's again a good news for us, especially real estate people. Now, this is something that I've been bewildered, not being an economist. We say that our economy is doing very well. Uh, we were once a tiger in the region when it comes to the performance of the economy. And I'm looking at the prices of properties in Malaysia compared to the other parts of the world. I've traveled a bit in the ASEAN countries. The properties have all gone up so high, and Malaysia is still the one, if not the lowest in the region. Why is it so? And they're doing so well, And property prices are lower than the other countries.
Soma, uh, it happens sometimes that though some investors, they have got allocation in their portfolio. So they have already taken position in real estate. They want to take position in equity markets. Right now, equity markets are booming.
Mm.
You look at Magnificent Seven, they are going all-time
The share
high.
market, okay.
Yeah, the shame. So sometimes investors they need to reallocate the resources to different asset classes. Sometimes they invest more in property, and sometimes they invest more in bonds and equities and commodities. So it's a cycle. It moves in a cycle. So sometimes I feel that investors, they have taken large position in real estate, and they want to move to other asset classes. And as the saying goes, you don't want to put all your eggs in one basket. You need to diversify. You need to have a global perspective. And now with internet and technology and all that, investors, everybody, if you ask nowadays, everybody has taken position in US equity markets.
Yeah.
So everybody wants to ride that wave of Nvidia and Google and Microsoft and the energy companies. So I think it happens. But overall, we are back to the era of 1970s. And IQI was the first one in November 2020 during COVID. We mentioned about stagflation. And we said stagflation is going to hit advanced economies. So what is stagflation? When your inflation is high and your GDP growth is lower. When your cost of living is high as compared to your income. So we are back to the same era. In 2022, we witnessed that 60% of the global economy was in stagflation, 25% were on the verge of recession, and only 10% of the economies were growing. So we are back to that era of stagflation of 1970s, where most of those sophisticated and smart investors who really fathom history and economics, they only take position in tangible assets. So what are tangible assets? You have real estate, you have gold and silver, you have oil and gas, you have arts, you have agriculture. You love coffee, you love rice, you love tea, so do I. So those sophisticated and smart investors who uh, can understand history, they've always taken position. You want to go and touch the walls of your house because
Mm.
that is yours. So I think we are back to the same era of 1970s where because of stagflation, most of those investors are taking position in tangible assets. I give you a very small example of UK in 1970s.
Mm.
The inflation in UK in 1970s, from 1970 to 1980, that is a period of stagflation. The inflation was 13.8%, and real estate market appreciation was 16.3%. So real estate market actually, it gives you a hedge against inflation, against the rising prices. So if you want to hedge yourself against inflation, tangible assets, real estate, and we have already written a book, it's available on the internet. Real estate has become the new global currency.
Global currency.
Yeah. So we have written this book, myself, Kashif, and Daniel, in 2015, and it's available. It's absolutely free.
Oh.
And at that time, when we had written this book, nobody thought that this will become eventually true. That real estate has become the new global currency. So the choice is yours. You want to have sleepless nights, or you want to have peace of mind. Equities can go down to zero. It's just a paper. Bonds can go down to zero. We
Real
have
estate
seen
can.
we have seen what happened in Greece. We have seen what happened in 2022 in UK when the Treasury Secretary made a wrong statement, and suddenly there was a market shenanigan in the UK. So those investors who understand history and economics, they have always taken position in tangible assets. And tangible assets, they protect you, they preserve your wealth, they give you protection to your wealth because of this inflation. These are like sustainable returns.
Can you, this may sound very simplistic, can you just explain to our friends what does it mean hedge against inflation?
Very simple. It's protection. How do you protect your money? In these tempestuous times, in these turbulent times, one strategy that all real estate agents and our warriors can educate to our valued investors is how do you protect your wealth? How can you have peace of mind rather having sleepless nights? So inflation, by investing in real estate, by investing in tangible assets, you can protect your wealth. And why do you want to protect your wealth? Because you're looking at future. Future is very uncertain.
Okay.
So in order to protect your wealth, it's very important that you invest in tangible assets. Yes, there are a lot of exotic assets and fancy assets. But I am from old school. I was born in 1973. I still believe that tangible assets can give you sustainable return and it can protect your peace of mind.
Okay. Now, this is a discussion that is going on among some of the senior practitioners that the Malaysian property prices has been hovering at a lower level for years now. We really have not gone up as compared to many other countries like Philippines. Do you foresee the property prices rising or rising up quickly in the year to come?
Yes, the reason is very simple. Uh, Post US elections, now with President-elect Trump, we can expect higher tariffs for Mexico, for Canada, even for China. So when China takes the heat of these tariffs, they will move to other countries. And as I said, Economist magazine is quite bullish on three regions: ASEAN, GCC, Middle East, and Africa. So China will definitely move her investment to ASEAN region. And in ASEAN region, why in ASEAN region? Generally, ASEAN region population of 620 million people, GDP size of almost $3 trillion. The governments are stable, economies are stable, consumption patterns are strong, investment is strong, there is macroeconomic stability, it's a young population, you have got ports, you have got geography. So it's an ideal opportunity for China to park funds in ASEAN region. It's an ideal opportunity for China to park funds in UAE or Qatar or Saudi Arabia or Africa, because all these countries, they have got natural resources. So once you have natural resources, China would like to do trade with these countries because China wants to have these natural resources for her population. So I think, in my opinion, ASEAN region will be booming in the next 5 to 10 years because the global economics and geopolitics, all these factors are changing at a very fast pace. And when you look at exogenous factors are becoming unpredictable. The risks are getting higher. You have cyber security risk, you have geopolitical risk, you have supply chain risk, you have commodities risk, you have energy risk. So when you have all these risks, you have to protect yourself. And the only way you protect yourself is by increasing position, by increasing trade with the countries which have got natural resources. So I think ASEAN, with its rich history and with young population, strong demographics, natural resources, macroeconomic stability, ASEAN will continue to be on the global investors
Okay.
radar.
So I think it's a good news for all those in the ASEAN countries that the economy is going to do well. We are going to be a star. So I think we must prepare our salespeople to take the challenge. I think one of the things that lacks is when we don't really think about what changes are going to take place generally as a firm. And if our firms can understand this, then they can take position as to maybe now Malaysia, we try to get foreigners or Malaysians to go and invest in other countries or bring in the foreigners coming into Malaysia. I know there are one or two companies that's doing it, not to mention IQI, but I think this is a position we can take. Okay, let's now quickly move from what you said and talk about the economy of the countries in ASEAN. By the way, Arena, ASEAN Real Estate Network Alliance, was founded many years ago, 7 years ago, and we comprise of all the National Real Estate Association of the respective countries in ASEAN. Right now, we have got 8 members out of 10 countries. The other 2 countries that we are still working on is Brunei and also Laos. Laos provisional member. So they're all online now to listen to us. So can we start off with my favorite country, Philippines?
Philippines, we expect, and if you look at the latest issue of Economist magazine, uh, the economy will be growing between 4.5 and 5.5%, with a lot of investment coming from US, Europe, and China.
So they're going to do well. Okay.
Yes.
Uh, I just read in the paper this morning about the political hoo-ha that's going on in the Philippines between the number 1 and the number 2. Do you think that's going to be a big issue?
I think it happens in every economy. It's a micro variable. But most of those global investors, this is another angle that our real estate agents can analyze very smartly. When you look at the economy, you have to look from the macro perspective, not at the micro perspective. Let's say, if any country has got some issue, political issue or any structural issue, yes, it happens. It could be one-off thing. It might fizzle out in the next 3 to 6 months. But eventually, you need to look at the economy from a macro perspective, how the economy is doing.
Okay. How about Thailand?
Thailand will be growing between 2 and 3%, with investment and tourism to remain strong.
That's low, 2 to 3%.
Yes, because Thailand has been facing a lot of structural issues. There have been some challenges on the exogenous factors. So I think Thailand will be growing between 2 and 3%.
2 and 3. Okay.
Yeah.
Singapore.
Again, Singapore economy can give you surprises. Singapore economy will be growing between 3 and 4%
3 and
for next
4.
year.
Okay. Indonesia.
Indonesia, booming economy, my favorite. The ambassador of Indonesia, Ambassador Harmona, is a good friend. He always talks about his country. I think Indonesia will be growing between 5 and 6% for next year, with strong investment, strong consumption, and exports will be higher because they have got natural resources.
Okay. All right. Indonesia, the Association Indonesia they just elected their new president. And in fact, this morning, Cambodia is electing the association is electing a new CVA, electing a new president. I think by the time the session is over, we'll know who's the new president. So what do you think about Cambodia?
Cambodia, a lot of Chinese and American investment come into the country. I expect Cambodia to be growing over 5%.
5%, huh?
Yeah.
Okay. Then we talk about Vietnam.
Vietnam is a star. Vietnam is a star. We expect Vietnam to be growing over 6% for next year.
6%, huh?
Yes.
Myanmar.
Myanmar, premature to say, but it should be growing between 3 and 4%.
Okay. But there's isn't much happening because of their political
Yes,
issue.
there are a lot of structural issues, and macroeconomic stability is a huge question now.
What advice would you give to the Myanmar real estate agents?
I think they need to come out. They need to invest in other countries. They need to understand how other countries are performing. Malaysia is a very stable market. The rules and regulation are very strong. It's not a speculative market. It's for those sophisticated and smart investors who are looking at long term. So the Myanmar real estate market, if they need to understand how the real estate market actually works, they need to come to Malaysia or Singapore, or they can see the rising star Vietnam, how Vietnam is attracting investment, especially in real estate market. Because Malaysia is a perfect case study for Myanmar, because it's a very stable market.
Okay. This is a very small country. Laos,
Maybe above 3 to 4%.
3 to 4%. Huh?
Yeah.
Okay. All right. So basically, to all those arena counterparts, that's what we expect. I think there are 3 countries that is going to do very well between 5 to 6, and the rest are hovering between 3 to 4%.
Yes, that's correct.
Okay. So you were just mentioning earlier about Africa, and ASEAN. Between these two, who will you think do better economically?
ASEAN has got the infrastructure. ASEAN has got the policies. The macroeconomic stability is very strong as compared to Africa. There is one similarity between ASEAN region and African region. Both countries are very entrepreneurial. The people of both the regions are quite entrepreneurial. Africa's economy by 2025 will hit the African region will hit $4.5 trillion, and ASEAN region will hit 3.2 or 3.3 trillion dollars by 2025. So income levels are rising in both regions, and that's why Economist magazine said that GCC, ASEAN, and Africa, these are the three regions that will be driving the growth of global economy for the next 5 to 10 years.
Okay. So when you mentioned that Malaysia is going to do well between 5 to 6%, what advice would you give to the Malaysians as to uh, which country should we be looking at? Let's say because some investors want to put their money outside the country. Which country would you say would be the number one, number two countries to put money in and hedge against inflation?
Hedge against inflation, I would say Vietnam. Vietnam is one of the booming economies, and real estate will continue to drive the Vietnam's economy. Number one. Number two, I see a lot of investment going into Australia. So Australian market is very, very favorable. Chinese are coming back. The Chinese investors are coming back
Okay.
into Australian market.
Okay.
So I think Vietnam and Australia would be my ideal choice.
Okay, I want to move a little bit away from the countries, back to the public at large. So now with all these things happening, generally the public say the Malaysian property prices are very high, it's so difficult to go in, and I've got a different perspective of it. What advice would you give to the public about investing in the property in 2025? And what do you expect in 2026?
Soma in 2025, investors, they need to look at where's the demographics, where's the density. They need to invest in that area. Which areas are booming in KL, in Penang, in Malacca, in Terengganu,
Johor.
in Johor. Why Johor is suddenly attracting so much of investment? Because data centers are being set up in Johor. So wherever you have global investors eyeing that area, you should follow that. So the very standard rule for global investors, wherever they see the government focus, wherever they see the sovereign wealth funds are moving into that country, wherever they see the institutional investors are moving into that country, they will follow them. Because when governments are coming in, they don't come with $100 million. They come with 5 to 10 to 15 to 20 billion dollars. When sovereign wealth funds, which are quite big, like if I were to tell you,
Sorry, can you describe the sovereign funds?
sovereign wealth funds are backed by the government. They are independent, they have got huge funds. And these funds, they want to park globally. So if I give you a very small example, in Gulf, the whole 6 countries in GCC, you have Saudi Arabia, Qatar, UAE, Oman, Bahrain, and Kuwait. These countries have got sovereign wealth fund who have got $4 trillion. And they are investing in Indonesia, they're investing in Philippines, they're investing in Malaysia, they're investing in Singapore, they're investing in Hong Kong, in UK, in Turkey, in Egypt. So they're all over the world. So how to attract the sovereign wealth fund into your country? When you make a policy statement, when the government say our focus is, let's say, KL or Johor or Penang, we will be developing more infrastructure for Johor because we want to attract data center investors in this state. Investors will follow that. So investors, when they get up in the morning, the first thing that they look at in the newspapers, where the governments are focusing on, where the sovereign wealth funds are going to, where the institutional investors are going. I can talk about endowment funds in US. Endowments are big. The university funds, because I have raised fund for University of Chicago when I was staying there. So when endowments, they come into the market, they move the market like this. They don't come up with like $1 billion. They come with $5 to $10 billion because they've got a lot of funds. And these endowments or pension funds, when they enter into the market, all the other retail investors, they follow them. Because they know their pension funds, endowment, institutional investors, the hedge funds, the sovereign wealth fund, they will stay for the next 3 to 5 years. They are not overnight investors. That they will come today and they will offload the investment and they will leave. No. When these funds, they come in, they come for 3 to 5 years. And they come with big investments.
So this is a good lesson to our real estate people. We talk about 1 million, 2 million, $3 million kind of deals. When you look at all these funds that's available, and if you've got access to those connections to all this, we are talking about billions and trillions of dollars.
Absolutely. Absolutely.
Yeah, it's so real estate. That's why it's so exciting. So I think we all in 2025 we need to shift our mind. We need to think bigger, especially those who are already doing very well. Should be thinking of doing bigger things.
Yes.
And I'm sure it's going to. I just want to go back to this 2026. What do you think is going to be in 2026? Do you think there will be some correction?
2026, premature to say, but yes, there will be some economies that will be booming, and there will be some economies that they will take some correction. And it happens everywhere in the world. There will be some that will continue to boom because of local and foreign direct investment coming into the country.
Malaysia.
Malaysia, I still expect to be booming between 5 and 6% for 2026 as well.
Oh, okay. So that's another good news. But don't wait for 2026. Focus on 2025. Work very hard and make as much as you can. In case North Korea sends a bomb somewhere, missiles, at least we have covered ourselves. 2026, maybe the market would be corrected a little bit because of the missiles. Okay, so let's move on. I think I got another 2 or 3 questions for you, Shan.
Yes.
You always talk to me about, other than real estate, about gold, about silver, and all other metals and minerals. Okay, other than real estate, where you think they should put their money?
Right now, I would say equity markets are booming, especially the US equity markets.
Okay.
And they will continue to boom. The YTD growth of S&P 500 is almost 27%. Gold, on the other hand, has gone up by 23% YTD. So I think it all depends on your. So when investors, they are parking funds, they need to have 3 or 4 questions. They have to ask themselves. One, what is the risk-reward ratio they're looking at?
Risk reward. Okay.
They want 5%, 10%, 15%, whatever. Secondly, are they risk averse? Do they have the risk appetite? Are they conservative? Are they aggressive? Or are they moderate? Number 3, what is the exit strategy?
They want to get out.
When to get out? You cannot hold on to your assets for the rest of your life. No, you need to have an exit strategy. You need to have 3 years, 5 years, 2 years, 1 year, whatever your investment strategy is. And the 4th question, have I done enough homework? Or am I just listening to Soma and Shan Said? Because the golden rule of investment is you have to do your homework. Ask your parents, ask your friends, ask your peers, ask your brothers and sisters who have made good investment. If you have been successful in making investment in equities, stick to equities. If you have made investment and you have been successful in bonds, stick to bonds. So it all depends on your risk appetite. It all depends how much homework you have done, how much due diligence you have done in any particular asset class. So it all depends on you. So it differs from individual to individual because you have to do a lot of homework. Investment is not like a kindergarten stuff. It's not like you will make money all the time. There will be time you will lose money. But those smart, sophisticated, savvy, and suave investors who have continued to make money are the ones who have done their due diligence. They have done enough homework, and they've gathered all the market intelligence report when they make those solid investment for the long run.
Um, how would I describe this question? I don't want to sound political. We have got our Bank Nagara, we got our Prime Minister who's running around the whole world trying to bring in investments, which I think has helped tremendously the economy. What do you think about the people at the top thinking about building Malaysia's economy to be resilient? Where would you rate it? Just to give the confidence to them that sometimes you say this person don't know what they're talking like. We are very fond of making the statement, oh, the Minister of Finance don't know what he's talking and all that. So what you're an economist, you know that the thinking, and I think you got some hand in the internal workings. I'm just saying that where would you rate it in terms of their thinking and really wanting to make Malaysia resilient as far as the economy is concerned?
It's very simple. You look at various regions, whether UK is growing or whether UK is going down. Malaysia's GDP is 5%, for example. UK's GDP is 0.6.
Okay.
Europe, average GDP is maybe under 2%. I am saying on the higher side. The average GDP might be lower of the whole Eurozone region. Malaysia is still 5%. ASEAN is still growing. Indonesia is still growing. Philippines is still growing. Vietnam, Thailand, they're still growing. So you have to compare yourself with other regions. Are we growing or are we going down? Are we politically stable? Are we getting investment from local investors and foreign investors? What about our equity markets? Is our bond market stable? What about the other markets? So if you compare with other regions, Malaysia has done fairly well in terms of rising income level, the GDP. For a layman, it means my income level is rising. So when your income level is rising, yes, it may not happen across all segment of the society, but generally, if you look at the economy from a macro perspective, from the aggregate, from the summation point of view, from the totality, yes, Malaysia has done well and is much higher in terms of GDP growth as compared to many economies in Europe, or for that matter, UK, or for that matter, Japan.
Last question.
Yes.
And I think this is in the mind of everybody. The younger ones, they just brush it aside, but those who are older in the profession ask this: and is Trump presidency going to help Malaysia? Okay, let's say Malaysia specifically and ASEAN generally.
You see, Soma, it's not very long time ago, from 2017 to 2020, that was the first term of President Trump. Did Malaysia economy go down? I ask you. Did Vietnam go down? Did ASEAN as a region, did it go down? The answer is no. The trade was happening with China, with Europe, with US, with Africa, with GCC, everything was happening. So there was this news item that Trump is bad for Malaysia. So when you make these statements, especially coming from a bank, you don't understand history. It's not long, it's not 15 to 20 years ago. It is just recent past. From 2017 to 2020, President Trump was there. Malaysia was okay. Malaysia was having a very structured growth. So and if I still remember, I quote my Nobel laureate professor, late Robert Fogel. I was sitting with him over lunch one day in Chicago. So he would call me Captain Said because he asked me about my background, my school. So I told him that I was the captain of my school hockey team.
Okay.
So in US, everybody would call me Said because of my surname. They won't address you with Sean. So he would say, Captain Said, you have to understand history. So history repeats after every 15 to 20 years. So my professor, Nobel laureate Robert Fogel, who got his Nobel Prize in 1993, a very smart gentleman. So I still remember his words. So if you want to understand markets, you have to go back and read history. because history repeats after every 15, 20, 25 years. So once you understand history, you can relate a lot of things to the present moment. You cannot get the past back, but you can learn from the past. And you can make smart choices when you understand history and uh, bring those analogies to the present moments and see where you can relate and how you can make money and how you can ride the wave of uncertainty and how you can profit from that. So once you read economic history, like what happened in 1920s, 1930s, 1970s, what happened after Second World War from 1945 to 1955. So you can learn a lot of things, but you have to understand history. That's why I said, coming back to my point, in global, smart, and sophisticated investors who understand history and economics, they have always taken position in tangible assets. So when I talk about tangible assets, I'm talking about real estate, gold and
Gold,
silver,
silver.
oil and gas, arts, agriculture. So these asset classes would protect your wealth and you will have peace of mind rather going through sleepless nights.
Yeah, I like the thing about the tangible asset arts.
Yes.
One banana with just the tape went for some 5 or 6 million. I think $5 or $6 million.
Yes.
Doesn't make sense at all. They said after you eat the banana, there's no value to that to that to that painting. Shant, been enjoyable talking to you. I myself have learned a couple of things about real estate, about economy and real estate. So I think you've given a fair share input on how we as real estate people can understand the economy to relate this to everybody. This is a podcast, it's available. So if you want to go back and review this and then you get some points, it's a very tangible point to make to the public at large. Okay, in conclusion, what would you like to say to all the real estate people out there in the region, Malaysia and in the region?
And thank you very much, firstly, for having me in your broadcast. I am honored. I would say real estate has become the new global currency. So if you want to protect your wealth, continue to invest in real estate and tangible assets. So that will give you peace of mind and that will protect your children. Because when you're making investment, you're actually doing it for your children. So if you want your children's wealth to be protected, you should invest in tangible assets. Thank you very much.
Thank you very much, Shan. Let's give a big round of applause. Thank you very much. Um, uh, Hopefully next year we call you back in the middle of the year and see where the economy is heading. Okay, all right. A couple of announcements before we end. I think there are some QR codes that you can scan. Number one, that's a feedback. That's a feedback form, right? Yeah, that's a feedback form. Please scan it and please send us some feedback. I know we have received some. I know a lot of people are watching. Tell us whether do you enjoy this, whether there are topics that you want us to discuss about, anything specific. Please call us and please inform us, and so we can relate back to what you want. Okay. The other one is, can we go back to the earlier slide? You want to watch the earlier episodes, so far already 3 episodes. You can always go back to YouTube, or you can go back to the Instagram and TikTok channels, Somasan007. You can watch that and get updated, or if you want to refresh some ideas, you can go there. The third one is that next show is on the 20th of December. That is on the goal setting by Muhazrul. Muhazrul is one of our top leaders in IQI. He manages the Putrajaya office, a very dynamic young gentleman. He's got some good ideas. He's a young chap on the go. So there's going to be an exciting session. So please join us on the 20th. And on the 27th, we will be having the long-awaited Duta Enclave interview. I think that everybody seems to be very excited. Everybody's calling me, when is it? So next month we're going to have 2 sessions. So please try to attend and listen to that. Okay. So with that, I again want to thank our chief economist, Shan Said, Captain Said. I
Captain
think I'll
Said.
call you Captain Said from now onwards. Captain Said and all those who are tuning to us. Thank you very much. We hope you enjoyed yourself. Please give us a feedback and we can improve. Thanks to the team that's putting up this show. We put in a lot of time and effort. So with that, once again, thank you and uh, go out there and do the last sprint for 2024, which is exactly 1 month from now. So try to achieve whatever targets that you're not able to, but try to do a little bit more. Thank you very much, and God bless.